All right, hope everyone's having a good morning. So, I don't really have a full agenda for this video. I really just woke up and I just felt like making a video since a couple things were on my mind. So, anyways, I was watching a YouTube video of a person who, I guess they're a successful trader. At least they claim to be, and I'm sure they are. But again, I have no idea. And the name's not important. But sometimes I'll watch them just for entertainment value. They don't trade any of Al's concepts or anything like that. They do their own thing. They trade a lot of U gas, it's UDAZ. Whoops, UGAZ, and then DGAZ, DGAZ. And I guess they like the natural gas. They always talk about the natural gas report. And one of the things they were discussing was, and I thought they had a valid topic, was for natural gas, which is add in Q for the continuous on TradeStation. They talked about on the 10th getting really chewed up over here. And it's an obvious spike in channel. It's a bull trend. Now, one thing to remember, when you have really big days, that means the stock market overall is trending. Therefore, other charts are cleaner. I really don't like to look at natural gas all that much. I prefer, if this is the 10th and here's 7 a.m. or 8 a.m. Central Time to 12 Central Time, if we look at the NQ, which is the NASDAQ, it's going to basically look the same. So I'd rather look at the NASDAQ. But anyways, what this person talked about was, I guess they missed a lot of the move and they were upset about it. So they bought and ended up getting stopped out for a big loss. Or maybe buying more. I don't really know. But they took a big loss. Sorry, I've got kind of some sinus issues. So my voice is kind of all stopped up. And I thought it was kind of funny. They were, they could tell they were a little stressed out about it and whatnot. And, this person, they use all sorts of indicators. Their bars are hard to read. And it just made me think about price action in general and just how, fortunate one can be if they really study out and study what he's saying. Let's look at this. So over here, we don't even need to see this. Well, all we need is this information right here, this bar right here. So let me kind of do this. I like trading this way. I usually have a chart, matrix, and good to go. So here's the 10th. Clearly we're selling off, and I'll just go ahead and talk about this. This looks like a bear, we're getting an endless pullback of something. So I'm sure over here, and this is just, you don't need this, but they just added stuff. Strong bull breakout, probably going to get a small second leg up. Possible exhaustion, bulls. And by the way, before I go any further, think about always in. I think one of the biggest issue people face is they try to do too much. I am a prime culprit of it. Completely speaking from experience. And I know that when I trade strictly always in, I generally do better. Because you find out in trading, the less, and this sounds obvious, but it's just very true, if it does sound obvious to you, is that you'll generally, nearly everybody has plenty of winners. They have too many losers. So if you look at the end of the day or end of the week, you'll count up and say, gee, I actually made a fair amount of money. I just lost too much of it. So instead of focus on taking more trades, focus on cutting back the losing trades. So that's why I'm going to speak totally from all and always in perspective for this entire video. No scalping at all. Strong bull breakout, always in bulls get out. Aggressive bears will sell, expecting a few legs down, maybe a test somewhere down here. Because we're not selling off very strong and bulls are starting to bottom, always in bears are going to scalp out. So eventually they're going to get out, bulls are going to buy again. They'll either buy here, maybe here. They probably won't buy here, expecting a small second leg down. So strong breakout, always in, expect a second leg up. And, again, maybe a second leg up from this bar, but we're starting to form a trading range and we're channeling up. Always in bears get out. And now we're getting a bear break out of the bull flag, which the bull flag was here. So a bull flag is any pullback that you think is going to be minor and resume the trend. This is the bull flag. It's a minor reversal. Minor reversal. Minor reversal. Bull breakout follow through, possible exhaustion. Endless pullback. It might be minor, but it looks like it's turning into a major reversal. So when you get the bear breakout in dojis, although they doesn't look very strong, look at a 15-minute chart of consecutive bear bars or a 30-minute chart. It's a 2-bar reversal. Big up, big down. May go sideways, but it's always in short and may have, may just trend down. And again, I apologize. My nose is all stopped up. Nothing I can do about it. But I do want to make a video for y'all. So we're just going to have to compromise. So always in short, channeling down, bulls making money below bars. So made into our trading range. However, that means trading range price action is likely, but it could go down a lot further. Strong bear breakout, probably going lower. And, this is really climactic, really parabolic. So it may get a deep pullback. It's a kind of a bear breakout of a bear channel. So make it down to here. Wouldn't shock me. Starting to form a bottom. Deep pullback. Bulls trying to close this gap. So yeah, with always in, I'd get out above this bar when you have what is this? 1, 2, 3, 4, 5, 6, 7, 8. Like a 16, 17 bar micro channel. It's climactic. First slip should fail. Get out over here. You have a low 2 short, bad signal bar. So probably will fail and go outside up. Or get out above this bar, expect a few legs up. Always in bulls will buy. But they're expecting a bear flag. So may get another push up. Probably not going much higher before we sell off. The reality is, and as crazy as it sounds, you sell the close, put your stop up here, and you can probably avoid a loss. And you can probably make money if you sell higher. Even the traders that sell here and sell more below this bar made money. Now, the thing is it'd be even higher probability if we just sold off and went straight up without testing these lows. But it's still high that we're going to retest these lows. Okay, so strong rally, double bottom. Bulls trying hard to get the bull breakout. Now, the only problem with this is this could be exhaustion. And by the way, I just, as always, it doesn't matter what market you're looking at, just study markets, study charts, pick a 5-minute chart, 15-minute chart, daily chart. I like 5-minute charts. That's what I'm generally look at. Bulls trying to get the bull breakout. What will the follow through look like? Bad follow through. So bulls probably get out, bears will sell. And so what happened right here? The bulls strong rally. Got a 2-legged pullback, tried to rally again. So we tried, in essence, 3 times. 1, 2, 3. The bulls tried 3 times to get their bull breakout, and they failed. So possible second leg trap. Bears will sell right here. Bears may not sell here. They may say, oh, well, consecutive buy climaxes. Maybe a second leg up from here. So leg 1, pullback leg 2. They will sell here. Or they'll wait for 3 consecutive bear bars, and then boom. So look what happened. Bears were able to get out and avoid a loss. So do you buy here? You can, but I'm concerned. You know, it's an okay buy. I'm a little concerned with the strength of this. 3, 4, 5 consecutive bear bars. Strong surprise bar may get a small second leg. So if you do buy, you have a few choices. You can buy and get stopped out. You could trade a half size and buy and get stopped out, and then wait for another buy signal and buy a full size, or you can use a wide stop. I would prefer uh, I'd probably wait. I'd wait for a second entry or wait for consecutive bull bars, and that's why. It's kind of hard to manage these trades. So, if you know the odds are you're going to get stopped out, you buy here, and then you put a wide stop down here. The problem is, do you buy more? You got to probably buy more, and look how close you come to getting stopped out. So they're just really not my favorite trades. I've just kind of learned to try not to take those trades anymore. Okay, so no good stop entry, no good stop entry. The Bulls just not quite doing enough. Maybe they buy here, but pretty tight trading range, fairly tight channel. So starting to get bull bars. We're trying to rally. Okay, probably always in long at this point. So always in long, Bulls buy, stop down here. So first will down should fail. Probably gonna test up to the top of the exhaustion, which is here and here. So I would just pick here. So you can call it a low too short, but very tight channel. So probably the first versatile down is going to fail. And, again, we're just channeling up. So what happened right there? I got to fix this, unfortunately. Okay. So channeling down, channeling down, channeling down. And all I need to know is this. In general, it's best to wait for a second bar. However, and you can, but the one thing to remember is, because I know the logic. Okay, it's a spike, second leg trap. What if I buy and get a bear bar closing down here? This bar is so big. I mean, let's just in terms of everything else. I mean, it's closing above the past 200 bars. It's so big that you're going to get a second leg. The odds are just extremely high. Now, with that said, it's also so big, traders know a pullback's probably imminent, so they're going to buy the close and scalp out. But either way, when you see a bar like this, it's huge. You got to buy. You buy, put your stop below the bar. And I keep zooming out because it's just like I feel like the price is so kind of close together. But that's okay. Let's do this. But again, though, I will say this again. Really focus on always in. Really focus on understanding always in. So always in bulls. Let me fix this. I'm gonna have to do I'll just do it like this. I'm trying to make it easier for y'all to see, but the problem is the bar is just so big it kind of distorts the chart. So yeah, this works better. So big bull bar closing above many bars. It's always in long. Bulls buy, stop down here, or they wait for follow through, buy, stop down here. There's no way I'm going to sell. And we're just channeling up. So two-legged pullback, but no reason to really get out of any longs. Okay, now we have a strong second leg. So one pullback, two. Could be a parabolic wedge. One pullback, not really good shape. I don't know. One pullback, two pullback, three. So three pushes, 1, 2, 3. Anyways, it's a lot up in a very short period of time. So you kind of got a few things going on. Number one, you have a second entry. So IOI, well, not really IOI, but Went below this bar, went above, went below. So it's basically second entry. And you have not touched the moving average in a lot of bars. You've gone really far up really quickly. You possibly have an exhaustion bar. You get out of short, get out of longs. Aggressive bears will sell. And, if you bought up here and you say, uh-oh, bulls bought the close, disappointed, got out break even, now we have a second entry, just get out and wait for a pullback. And you'll be fine. Take the loss. And this person, they bought up here and didn't take the loss. That's a great thing about always in, though. Always in, if you truly trade it, forces you to take losses. It forces you to get out if the always in switches. And that is the bread and butter, so to speak, of algo trading. So you really, really have to understand swing trading before you understand scalping, because, sure, you can buy the close, scalp out, buy the close, scalp out, buy below, scalp out, buy the close, scalp out, buy the close, scalp out, buy the low, scalp out. But if you buy this low, you're buying a potentially always in reversal. So bears may sell here, and depending on the strength, they may sell more. And bulls are going to get out, and depending on the strength, they may buy lower. But the bulls, they want to wait and see what the bears can do. How strong are the bears? How committed? And how committed are the bears? How committed are the bulls to buying a pullback? So bears sell. Decent entry bar. 3 consecutive bear bars. First reversal up may fail. Doji. Big bear bar. And this is kind of one of the problems, by the way. This is another reason why it's great to wait for stop entries, because if you just buy a limit order, a pullback, so to speak, put your stop down here, you get faced with the difficult decision of probably having to exit for a loss here, when if you would have waited for a stop entry, you wouldn't buy yet. So getting bear bars, more bear bars. First reversal up's probably going to fail. We closed this gap. This could be the high of this chart for now. The high, at least for a couple hours. So, to the moving average, bulls will buy for a scalp, but it's a micro channel. There's no way I'm going to buy for a swing. And that's exactly why. Closed the gap, bulls bought the slow scaled and made money. Big bear bar, another bear bar. So again, probably going lower. Now what do you notice here? Well, we got a consecutive bear bars. Now we're getting bear bars, bull bar, bear bar, bull bar, bear bar. Probably going to get a bull bar. So, consecutive sell climaxes, we're at the bottom of the channel. Bulls are going to buy. Bulls get out. Bears get out. Bulls start buying. And we're rallying up strongly. And now we're probably in a trading range. So, I'm going to make a video in a little while to cover more kind of always in trading. In the meantime, that's all I've got for you. And I'll cover more of the S&P. Again, though, either way, you got to study. And you got to study, and you got to study, and you got to study some more. And when you think you're done studying, you need to study some more. Now, with that said, study always in. Study the basics. Alan Richard made a smaller course called, I think it's Day Trading Insights. Let's see if we can find it. Yeah, here it is. It's called Day Trading Insights. You can see the link right here. And again, make no mistake, Richard is the person who assisted Al in editing Al's new video course that he made recently. So this video, this is all of Al's content. It's Al is actually the recording in the video. Richard just helped Al make it, and it's a 6-hour course, and it covers all of Al's stuff. So it's a question and answer. You know, Richard's asking Al a bunch of questions. Al answers them, and they're pretty interesting topics. I like them. And the course is designed. It's really the best trades, if you will, or best ways to get in the market for a beginner, and not a beginner, but anybody. So it's just Brooks price action, best trades, major trend reversals. You got pullbacks. You got trading ranges, how to enter a trading range. You got breakouts, how to enter a breakout. And what I really like about this course is, if you've seen the other course quite a few times, it's a great refresher on some topics. So, anyways, give that a look, see what you think. And other than that, I'll talk to you later.